Thank you, Helen. All right, we're going to get started. Hi, everyone. Thank you for making time to meet us today and to learn new ways that we can serve more diverse clients. My name is Maria Jose, and I am with Primary Residential Mortgage, and I'm going to be talking to you guys about clients that have DACA, folks that have green cards, work permits, ITIN, as well as low credit score clients wanting to put a lower down payment. Oops. There you go. That's me. So basically, what loans are available for people who have DACA? First of all, what is DACA, right? DACA is essentially the permit that is given to people who are brought to the United States when they're children undocumented. Also, quick housekeeping item. When I mention undocumented, I am referring to folks who do not have the documents proving that they are able to stay in the country or work in the country legally, okay? So DACA are also known as Dreamers because they benefit from the so-called DREAM Act. Essentially, they are given a little card that looks like a driver's license, and they can use that to apply for a mortgage, for credit cards, for auto loans. Essentially, they can qualify for the same mortgages as everyone else, including down payment assistance programs. Essentially, they will have to prove that their permit does not expire before they close on the loan. And if it expires or has already expired, then they can just show the letter that they get on the mail from Immigration Services showing that their process of renewal has already begun. Also very important to consider that it is essential that you can try to connect your client with someone that can relate to them not only language-wise, but also culturally. We know that miscommunications already happen when we speak the same language. And when you add cultural differences into the mix, it gets more complicated. At the end of the presentation, we're going to have a few resources that you can reach out to make sure that you can connect those clients with someone that they can relate or translate, and also make sure that you are creating a trust with your client, that you are having an honest conversation with them regarding their immigration situation, and making understand that there are programs for them out there, right? Cool. Essentially, the same will apply for folks who have asylum or folks who are applying for refugee status. They will also be given a similar card that looks like a green card, and they can use that card to apply for the same mortgages, FHA, conventional, VA, etc. Okay. Now, let's talk about ITIN. ITIN are also known as ITIN, or I have seen it referred to as alternative Social Security numbers because they look just like a Social Security number. They will always start with number 9. The ITIN number is given by the IRS for people to file taxes. Not everyone that has an ITIN number means that they're undocumented. I've seen someone who was born out of a military base and were given an ITIN number rather than a Social Security number. So just don't make that assumption.
Yeah.
For folks who have an ITIN number and are undocumented, they only qualify for special mortgages, also known as portfolio loan, non-conventional, non-QM loans, or private mortgages as well. Those tend to require a higher down payment, have higher interest, and higher credit requirements. Not all the lenders offer those programs, right? So basically, they have to shop around trying to figure out the best program for them. Those programs, like I mentioned, have higher requirements because they're considered quote-unquote higher risk. But a fun fact, actually, there are a few studies that have shown around the nation, folks who have ITIN numbers are less likely to be defaulted on their mortgages. Okay.
Oh, okay.
Yeah. Similarly, they can also use that ITIN number to apply for credit cards or auto loans, personal loans. So essentially, they can use that ITIN number to start building credit. Sometimes people start with an ITIN number, then they get documents, and they can transfer their credit to their new social security number. Okay? Interesting. We're going to have a few examples also in the presentation that you can refer. I usually get the question of if someone began working in the United States with a work permit and then they failed to renew it, what can they do? Essentially, they will only qualify in that situation for an ITIN loan until they start beginning the process of renewing their Social Security number.
Okay.
All right. And then some of the documents that a lender will look for or accept are the permanent resident card that looks like a driver's license, a work visa, also looks similar to that, entry stamps that are put on the passport, usually when you're crossing the border via car or bus, the EAD card, that usually is given to folks who are applying for asylum or refugee status. They can use that as well to apply. And the I-551 stamps, which again are essentially given to people when they cross the border by car or bus. Now, my next topic is what can you do? How can you help clients who have less than 640 credit score? If you have a client and they apply for a mortgage and they were denied because they were told that they did not have enough credit or that their credit was not high enough, encourage them to seek other options. We can do, for example, with a conventional mortgage, as low as 620 credit score with compensating factors, VA a 580 credit score as well with compensating factors, and FHA as low as 500 with a 10% down or 3.5% with a 580 credit score. A very interesting fact is that you can actually get an FHA loan if you are not a first-time homeowner. So let's say that right now I have a conventional mortgage and next year I want to buy a bigger house, but I only want to put 3.5% down. So what I can do is that I can go ahead and apply for an FHA because I currently do not have an FHA mortgage. Cool.
That's awesome.
Yeah. Awesome. Thank you, everyone.
Well, so Maria Jose, thank you so much. I just wanted to go back a little bit on, what you talked about, the DACA loans. Can that be used with MFA?
Mm-hmm. Absolutely. It can be used with MFA. Yeah.
Okay. And, we also talked about the resources of, language barriers.
Mm-hmm.
And I think that sometimes we've had that discussion, right? You have a client then, and I think Rob and I have had, discussions about it too. How do we provide resources for them that, because sometimes spoken language and what you read, comprehension is a little bit different. So how does that work? Is it because they are more comfortable, reading material in their, native language, or how do you think that creates, I guess, a level of comfort and maybe even trust, I think? Right?
Yeah, that's a good question. Essentially, I have noticed that people feel more comfortable relating to someone that understands their culture as well, not just the language. And I think that you touch on a very important topic, which is trust, right? Because obviously people have to do what they have to do for their families sometimes. But having that initial conversation, sort of making them understand that we're here to help them and to connect them with resources, including local nonprofits or religious organizations that work with their community, is always good.
Right. Yeah. And so like Maria Jose was saying, earlier, and we'll have some of those resources at the end of the presentation, so that your clients, can reach out and find somebody that can, assist and be part, because that is the goal here. We want to make sure that we provide, the proper tools for everybody to use, and add to our toolbox, right? Add to our realtor toolbox here. So thank you. Thank you again.
Thank you. Awesome.
All right. So it looks like Lauren is up next. I'm going to drive for you, right?
Helen's going to drive.
I'm going to drive. I don't know.
I'm going to do lots of next slide.
This is going to be fun.
Just fast. So my name is Lauren Sandoval. I am a mortgage banker at Bank of Albuquerque Mortgage. And just to start, I mean, I'm so excited to be in the presence of some really amazing people today. And honestly, anybody who is joining in on this call, thank you for caring about this as much as we do. And you know, just hopefully you get a little bit of a takeaway from any one of these topics today. And if there is something that we miss, or if there's something that you want additional information on or clarification or how to present this to your clients, please let us know. And you can contact pretty much anyone in the committee and they'll be able to help you get those resources. But to follow Maria, you know, the entire purpose of this is to increase housing in underserved communities. And one of the largest underserved communities in New Mexico is for tribal members and on tribal land. And so I'm going to spend hopefully not too much time rambling, because anyone that knows me on this call knows that can happen pretty quickly. So hopefully we'll get some good takeaways here. But my focus today is going to be on the Section 184 loan, or also known as the Native American Home Loan Program. It's had several names. I'm sure everyone has heard something differently. But this is a government-backed program that is designed to promote housing ownership for Native Americans. And the most important thing, and I want to kind of start with some statistics here, because statistics are the proof in the pudding, and I think it's important that we start with that. And so, you know, take it with a grain of salt here, because all of this is based on the 2022 census. And historically there's been a lot of underrepresentation with the census. And so but last year the average population for New Mexico was coming in just over 2 million people, 2.2 to be exact. And based off of our census, 11% of that was of either Native American or Alaskan Native descent. And so now the reason why that's important is, out of 2.2 million people, that's 235,000 clients that need our assistance. They need to know what resources are available to them. And why this kind of broke my heart a little bit is, out of those 235,000 people, only 1% actually obtained a Section 184 loan last year. And that is for the state of New Mexico. And so our real focus here is not only for us across the panel to be able to understand these products better, but for everybody that's watching today to know really what those kind of key identifiers are, so that way if you have a client that might meet this criteria, that it's not enough for you to be like, well, let me explain the whole product to you, but just enough to go, you know what? I think there's something out there that might make your lives a little bit easier, or to provide some type of resource. So with that, I'm going to have you get started, Helen. So just to reiterate, so this program is backed by the federal government. And why that is so important is, for lenders, it's a very low risk product, because they have a federal guarantee. So if there is some type of foreclosure or short sale, it actually protects the lender. And so when we're talking about risk, like Maria was talking about with ITIN, the risk is much lower for HUD 184, because there is that guarantee that is backed by the federal government. A couple of things that are really important to note with this product is it offers an extremely low down payment. So on loans that are over $50,000, the down payment's only 2.25%, which, as we're familiar, it's lower than FHA. It's lower than conventional. And so when you're talking to a client that might be eligible for this product, that's something really important to keep in mind. It also offers one of the most favorable mortgage insurance premiums. So for most products that you're going to do a low down payment like FHA or like conventional, you will have mortgage insurance premiums. But for a HUD 184, that premium is very low, and actually the lowest out of FHA and conventional products. Okay. And then we'll talk more about this later, but this product is available for not only purchases, but for refinances as well. To continue into the benefits. So this is one of the most important things that comes up for this is, well, why would I even do this product? Why would I compare that I already got qualified for an FHA loan. I already was approved for a conventional loan. But having those low down payment options, having that better premium for the mortgage insurance, and the eligibility can also include new construction. It can also include a rehabilitation loan, which we've seen a lot of requests for lately. I'm sure everybody on the panel hears requests for that every day. I found a house, but it's kind of a fixer-upper, which, as sales prices continue to rise, we're seeing a lot more of that in order to get an affordable payment. So it also includes those rehab loans as well. And then we'll talk more about the qualifying in just a few. So we go ahead and switch. Okay, so as you are talking to your clients, I think the main takeaway that we want to provide you today is just these little key components that go, this might be something for you. So for Section 184, any tribal member that is a member of a federally recognized tribe, and in New Mexico, there's 23. That's a lot, you guys.
Yeah, that is a lot.
That is a lot. So any member of a federally recognized tribe, and same with our resources before, we'll have some resources there at the end. But if you have a client that's unsure of whether they would qualify for this product, they can actually check their tribal enrollment. There is an online option to check their tribal enrollment. They can also check with their tribal representation or their council to see if they are a recipient. We also lend to full tribes, not even just an individual. And then a TDHE, a designated housing entity. It's very, very popular right now that we're seeing an entire tribe request for 20, 25, 30 different loans at a time to assist with housing for their tribal members.
Wow.
Okay, we can go ahead. So the loan tractions that are available are the similar, we kind of touched on this a little bit, but I think the most exciting one is the fact that you can actually use this on a 1 to 4 unit property, very similar to FHA. I know everyone is seeing all the TikToks on house hacking and all the things that you can do to create generational wealth. And this is one, if you are eligible and you do end up purchasing a property that has 1 to 4 units, occupancy is required. So the borrower must occupy the property. However, if it does have 2 units or 3 units or 4 units, they can use those other properties to help cash flow and put some tenants in there, which, as we know, any opportunity to really streamline that process. Maria talks about it all the time about creating generational wealth and what can we do to help do that. This is a really great avenue. So very similar to FHA in that realm. We talked a little bit about the rehab process. You can do cash out refinance on this, debt consolidation, and brand new construction from the ground up. Okay. So property loan requirements, this isn't going to come up as much, but we talked a little bit. So you can purchase as a single entity, as an individual, in a trust, also as a full TDHE, as a tribal entity as well. And then I think we'll go ahead and skip that, keep going because we went on this one. Okay, so this is an area that's really important to me because one of the main questions that I receive, and it's probably the same on everything that we're talking about today, is, well, is this loan harder to get? Do I need additional documentation? What else? Is it going to cause me a bunch of extra grief? If you're a realtor, is it going to cause you extra grief? Is it a delayed closing? Is it a harder appraisal? All of the questions that I get asked constantly, my realtors will call me and say, I got an offer. I don't know what this loan is. Is this going to be harder to close? Should I even look at this, offer? And as much as we want to say that doesn't happen, that does happen. And, I think the last year is a pretty good representation of that, since how few FHA loans were accepted, how few VA loans were accepted. And so part of what we're talking about today is just to kind of get rid of some of those misconceptions about these products. But when you're qualifying for a 184, it's going to be exactly the same as every other loan. The main difference is when we're trying to document whether there is eligibility, we ask for a CIB, which is a Certificate of Indian Blood, very similar to with what Maria was talking about with having your green card or any other identification that would tell us and underwriting that they are eligible for this product. Okay, so yep, I think we're good. Okay, so I want to talk a little bit, I'm going to put a pause on this really quick, but just a couple questions that come up with the qualifying process. And I know we had an awesome discussion about this. And so these are just some questions that come up for this that my clients have presented and also their realtor representation. But, well, what is that minimum credit score, right? We talked a lot about this. And there is none. And this is really important. And again, Maria, I feel like it was so good that you started off this because so much of what you said applies here. There's been many times where the client will say, well, I don't qualify for that product. I don't meet the credit score requirement. But for a HUD 184, different than FHA, where they do have credit requirements, HUD 184 does not have any credit requirements. What they're looking at is credit worthiness, which is treated on an individual case-by-case basis, which is why very different from a traditional loan, every single loan has a manual underwrite, which means the underwriter starts at the very beginning. They're not going off of any kind of predetermined qualification markers. They're really looking at compensating factors, how they've utilized the credit that they have, assets, reserves, what type of payment do they have now for rent, which is really beneficial because clients that are maybe unaware that they even qualify for this product a lot of times may not have the same requirements that other loans would require. Like, if they haven't been at their housing very long or if they haven't been in their employer very long, all of these underwriters are looking at these on a situational base, which is fantastic. And then, with that, the lender being, maybe having some extra overlay. That overlay word is really important. And we talk about this often, right? Is this a HUD 184 requirement or is this a lender requirement? Those are two very different things. And we talk about this all the time. I know Rob will probably talk about it too with VA, and we see it a lot where they go, I was denied for this product because of X, Y, and Z. And off of, what Maria was saying, that is the time that you as the professional should say, you know what, I remember having this conversation and I don't know necessarily that there was a credit score requirement. Maybe we should shop around. Maybe we should find an approved lender that we can go for. What is really critical with this product is not every lender offers Section 184 because training is required by the lender, by the loan officer in order to offer this product, which it should. It's very similar to MFA. You want the person that you're working with to understand the product that you're offering. And so HUD 184 does offer an online list of every qualified Section 184 lender in New Mexico, and there's over 30. So there's a lot of really amazing lenders that offer this product, and some have credit score requirements and some don't. So as you're talking to these clients, it's really important to acknowledge and say, okay, we need to do what it takes to get you qualified, whether it's with this person or somebody else. Okay. And I think, okay, we'll just leave it here. So where can Section 184 loans be used and obtained? So currently, Section 184 is in 38 states. Why is that important? Well, you have clients that move. It's very often that I have clients that move out of state because we lend in 50 states. So we have clients kind of moving all over the place. So if you have a client that's here and you know that they're relocating, this might be something that you want to bring up to them. Some states are not all the way there yet, but this map is forever changing. I will say the really wonderful thing is New Mexico, as you can see, is all in yellow. We have 100% approval for New Mexico. So every square inch of New Mexico is eligible for 184 loan. Okay, both on tribal land and off. So as you're talking to your clients, kind of keep this in the back of your mind so that way you know that it's available. Okay, we can go to the next one. Okay, so we talked about this a little bit. Now this map is dated, and I spent a lot of time trying to find an updated map. HUD's like, you get what you get. So I'm pretty sure this is at least, 2.5 years old now, but you'll see at the time there was only 745 loans that were issued in New Mexico from HUD 184. That's extremely low. When we're talking about, 225,000 people, and this is to date. This isn't annually. This is to date how many of those loans. So this is a very underserved product. It's a very misconstrued product. I think a lot of times people are like, I don't even know what this is. This is a fake thing. Use this. You put this in your tool belt. Make sure that you're using this to provide resources for clients that could benefit. And then this is the last screen. But what I wanted to do is really quick. Am I okay on time? Okay. Is just touch on a couple real frequently asked questions that come up for this product. Just so that way there might be questions that you've had in your minds too. And that way you can kind of identify it. So one is there's a husband and wife, right? One is an enrolled member of a federally recognized tribe and the other isn't. Can they do this product? Absolutely. So only one person on the loan, they do have to occupy, but only one person has to be a member of a federally recognized tribe. Okay. Which can be different with VA, right? Sometimes in order to get, lower down payments, it requires both veterans or to have a higher down payment. So, another really important question, and this goes along with having no credit score. I've had a bankruptcy. I've had a foreclosure. Does this disqualify me from having this product? And the answer is no. Very similar to FHA, if it's been 2 years from the time of their short sale or 3 years from their time of their foreclosure, they're going to be eligible again. And I think that's really important because there's a lot of misinformation in terms of financial literacy in underserved communities. And you have to be that little beam of light that says, you know what, I think that's inaccurate. Let's get you some information so that way they're not dissuaded from purchasing a home. Does Section 184 have income limits? And the answer is no. So this is really big because MFA can have income limits. In this space, there is no income limit. So if the borrower makes $200,000 a year, makes $30,000 a year, they're still going to be able to qualify for this product. Do they have loan limits? Yes. So Section 184, because it is backed by HUD, has very similar loan limits to FHA. But the thing that's amazing is Santa Fe County, Los Alamos County, those loan limits are over $500,000. These are big loans, you guys. These are not little baby loans, over $420,000 in the city limits. So keep that in mind when you're looking because these are also large purchases overall. Can you purchase as an investment property? And I know we touched a little bit on this earlier. The requirement for occupancy is still there. However, if you're looking at that 1 to 4 units and you want to be able to cash flow that property and put some tenants in there, that's totally a possibility. Okay. My favorite question, and then I will wrap it up so that Rob can take over. Are Section 184 appraisals more strict? No. So 184 appraisers are going off of the HUD handbook. So if in your mind, if you know the requirements for FHA, and we are going to send this out later today because I've realized for a lot of people, it's been a while since we've done a lot of FHA loans. It's been a while since we've done a lot of VA loans and just kind of getting back in the swing of things. But those same guidelines are going to apply. So if there's peeling paint, it's going to be a thing. Yes, ma'am.
There's just a question.
Yeah.
Keep going.
Oh, no.
Ask after.
Are you sure? Okay. And then, so no. So appraisals are going to fall in line very similar to an FHA loan. So if you're a listing agent on a property and that's your question and you see a 184 come across on an offer, really kind of compare it to that in terms of the appraisal status. And then finally, if you're going to present this to your client, these are the 3 steps that I would recommend that they do first, which is A, figure out their tribal enrollment. Do they qualify for this product? Do you have a CIB, that Certificate of Indian Blood? Do you need to reach out to your tribe to figure out that enrollment? Second is to get started on a homebuyer education. There have been many statistics that have shown that homebuyer education is critical upfront, prior to going under contract, prior to shopping for a property. That way clients feel confident about the process and they know what the expectation is going to be of their realtor, of their lender, of the inspections that they're going to be doing, and themselves. And then finally, find an approved lender. So once you find out your enrollment, once you find out how to get started on your home buyer education, we'll send out that link today so you can find an approved 184 lender so you can get started on the process.
That's awesome. Thank you.
There's a question.
Yes.
Yeah. So the question is,
Yes.
Ms. Lauren, could the 2.25% down payment be gifted or borrowed as a second mortgage?
So that's a really good question. And yes, so 184 does not require for the borrower to have any investment into the transaction, which means all of the closing costs, the prepaids, the down payment can be a gift. It can also come from a tribal entity as well. So that's a really good, give 5 stars to whoever asked that question.
We're giving 5 stars to Alma. Thank you so much.
Alma, you get 5 stars because that was a great question.
All right. So yeah, you know, thank you, Lauren. That was a lot of good information, you know, to follow up with what Maria Jose said. You know, this isn't, you know, and we keep looking over here because we have the chair for ABCD, Charlotte, sitting with us today as well, who's off camera. But, you know, this isn't really for us to, you know, teach our clients. You know, this is a goal for us to say, just like there was a spark of conversation that we had. Hey, let me connect you with one of our lenders, because this is what we do. We partner up. We're a team to provide the service for our clients, right? So, you know, not really our job, because that's not our wheelhouse. I don't want to go into the nitty gritty of the loan details. I'm like, I'm going to let the big brains handle this because this is a lot of information. And we want to make sure that we're giving the correct information as well, because there's so many nuances, especially with these, you know, loan types that one, we may not be as familiar with. We certainly don't want to miseducate. And they change, right? Yeah. Requirements change. MFA just had a series of changes in the last, you know, month, which I can't keep up with. And thank goodness you guys are here, you know. So, you know, that's the key. You know, we want to make sure that we have our connections with our, you know, lenders that we work well with. I know that I for one, asked tons and tons of questions. You know, I think some of my lenders may shut me off sometimes, but I'm just kidding. So, one of the other questions we have come up is, are collections a disadvantage to the 184?
So it depends on how many there is. So think about it this way. So FHA has guidelines that if there's $2,000 in collections or less, they are not counted. They don't have to be paid off. Mm-hmm. Collections are strict with 184. They are. And what that requirement's going to be is if the borrower, if I'm looking at a client that has substantial amounts of collections and I know that they don't have the money to pay for it, then we might be switching gears and looking at an FHA loan, because 184 is going to require a lot of those collections to be paid.
That makes sense. So, you know, that brings to mind that, you know, last year, and I want to say this was probably around October, November, there was a Native American Housing Justice Summit. And, you know, you touched about generational wealth and that financial literacy, you know, and we're here, you know, today, part of that is promoting that financial literacy and really being able to provide the resources. Again, we're not, you know, the information givers. We're the resource people. Here, let me find this resource for you. And that part is so important, because if they don't understand how those collections affect their ability to obtain these loans, then these loans may not be useful to them, right? So, you know, again, part of ABCD, come reach out to any of us, to myself, Charlotte, Adrian, you know, here at GAR. We have, you know, some resources available. You know, we went to the summit, they talked about generational wealth and how there's a large percentage of the Native American community that are still struggling to learn, you know, about what it really means to obtain credit, for one, what credit even is, And so, that great things to point out here. Yes.
It says, is there a tribal affiliation percentage limit when a person has saying they think it's a quarter?
So let me just, so everybody can hear, the question was tribal affiliation. Is it generally a quarter blood affiliation? Is it proven? And is there a tribal affiliation percentage limit?
So this is one that I'm going to delightfully probably put a pin in, because the enrollment requirements for what the tribe will actually consider, I think for me, I'm not comfortable enough to answer that question.
I think Siobhan actually answered it pretty well in the chat.
Oh, perfect.
Okay,
Can you read her answer?
Yeah,
Okay.
so it's Siobhan said that with the HUD 184 loan, all you need is your CIB, the Certificate of Indian Blood. The percentage of indigenous blood is dictated by the individual
That's what I was
tribe.
thinking.
Perfect.
Okay, so thank you,
Kinda what I
Siobhan.
thought Lauren was
That's amazing.
getting at.
Yeah, and mostly because the enrollment part is not what the lender.
Precise.
The lender doesn't structure how you become enrolled. The lender will verify enrollment.
Right.
And so that's really good to know. And we'll probably have to figure out on a tribe to tribe basis what that looks like.
That is another great point, and that I want to say that these programs are not structured by your lenders. The
Yeah.
lenders
Yeah.
go by the guidelines, and we have to kind of remind our clients that we don't want to guarantee our clients like, hey, this lender can do this because there's programs available here. We want to say to them more along the lines of, I think there's a program. Let's check with the lender and see if the qualifications are there. We never want to say, hey, there's this money available for you, because there's limitations to those programs and certain, guidelines that the lenders have to follow. So, we're working as a team. We're not adversaries here. We want to make sure that we're working towards that goal. Going back to that map, I wanted to ask real quick, Lauren, I don't know if you know, you said that New Mexico is 100%. Does that mean that tribes that are in New Mexico only, or can it be tribes from other states that are
So
here?
if they're going to purchase in New Mexico.
Okay, so just
So 100% eligibility for properties that are in New Mexico, both on tribal land and off. So good question. So like with Texas, this is not a colored map, but for Texas, it's not the entire state, which is kind of interesting. So at that point, it would almost be similar to USDA, where now with a USDA loan, we're going to go into the map and see where the property actually falls to see if there's eligibility in that area. That's what would happen if your client was moving to Texas. We would
Okay.
actually have to see if the property where they were looking is eligible for that product. But for you, in your mind, know that if it's in New Mexico, if it ends in NM, we have 100% approval.
okay,
for the
and they
state.
just don't necessarily have to be a tribal member of a tribe in New Mexico. They can be from a tribe.
Right.
If
like-
they have a CIB, then they will be able to purchase.
All right. Okay.
You guys, these are all such great questions.
Yeah, wonderful
So thank
questions.
you.
Thank you so much. Yeah, so we had a couple comments, I would definitely say we'll have some of those resources at the end, look at those, reach out. So thank you, Lauren.
Thank
so
you,
I
guys.
think, are you driving your own?
I could do that, yeah.
Okay.
And then while we're switching up, I was going to ask Lauren too, manufactured housing, and then talking about the collections. Do medical collections matter for 184?
Well, I think the exciting thing is medical collections, period, are going to start changing, right?
Oh, that's in the works.
So all of the credit bureaus that used to report medical collections that just changed probably in the last 6 months are no longer going to impact credit score.
Okay, so we don't have to worry about that.
So there's going to be a lot of changes, period, just in terms of the credit score and how much credit reports are going to cost in the next couple days.
We'll see how that
One
goes. And
more
then
quick question.
manufactured housing. Does 184 do
Yes.
mobile homes? Okay, cool. And then
How about student loans?
So student loans are going to apply very similar, and it's hard because everybody has student loans right now. So the one nice thing about HUD is HUD has spent a lot of time, and there's still COVID guidelines from HUD on how to make sure that student loans aren't disqualifying clients from purchasing a home necessarily, but depending on whether they're in forbearance or whether they're in repayment, will all depend on how what type of payment that we actually give to that student loan. But I will say this, I think student loans are one of the largest things that will dissuade a client, because they feel like it seems like so much, right? For a lot of clients, they go, this is $30,000 and $40,000 and $50,000, and it just seems like such a large amount. And so I would say, in that case, it would be good for them to talk to their lender, see what type of repayment that they're in, and how that will impact their qualifying.
Right. And this certainly goes about matching that client with the correct lender too, because it's just like when you work with anybody, that personality has to match too, and having that, the lender that has the perseverance to say okay, we see your challenges, but let's see what we can do about it, know.
And also, on that, right, culture is not just nationality wise, but also culture is generational, in what way they can relate to.
Right. That's an excellent point. Rob, take it away.
Cool. So we're going to jump into MFA. And so that's really just down payment assistance options. And I guess even before I even jump into MFA specifically, there's another phrase, or rather acronym, CDFI funds. That is just something that the federal government drops on lenders, i.e., like Bank of America, Nusenda got some. I think Bank of Albuquerque might have gotten some. These are all things that the federal government might have strings attached and say, you need to help some underserved communities, and this is how we want you to do that. Or I think most recently, they were just like, here's some money, do some good with it. And then the lender kind of creates their own guidelines from there. I know Nusenda specifically kind of based a lot of their guidelines for their down payment assistance program off of MFA's guidelines, so the $500 down, all that stuff. But just knowing that going into whenever I say CDFI, that's what that kind of phrase means. And we're going to talk about that with MFA, since there's new stuff with MFA. Lots of new stuff.
Talking about new stuff.
Yeah. More specifically, the new $25,000 grant. I know I've heard a lot of anecdotal, oh my God, this is crazy hype stuff. Everyone's like, go get that MFA grant. It's free money. And it kind of is. If you're familiar with Home Now and how that works, it's technically a second mortgage with zero interest, zero payments. And as long as you don't sell the house, and I think MFA's guidelines are not even renting it out either, but essentially don't do another transaction, don't refinance it within 10 years, that money is fully forgiven, in the sense that if you've borrowed it for that 0% interest, zero loan, for that amount of time, you don't have to worry about it after 10 years. That's sort of the in a nutshell version of that. There's the resources online, the housing.nnm.org, or whatever the website we have here. You see it there. That's going to be your resource if you want to dig a little further or ask your lender friends. But yeah, so why MFA? Because I know there was some controversy over that. We talked about FHA over the last couple of years, not getting the light that it deserves, outside the fact that why is it even on the purchase agreement? That's a whole nother can of worms. But it's a better, lower mortgage insurance. MI there you see on the slide means mortgage insurance for conventional. So mortgage insurance, just in a nutshell, goes off of percentages from loan amounts and such. So using MFA could actually help somebody, even if they don't use the down payment assistance. It's kind of a big deal for some people. If it lowers their monthly payment, they might be looking at a higher purchase price. It's just about purchasing power, much less even keeping some of that savings, in the household to help further things as well. So sometimes there's lower rates. It kind of depends on the person's credit score, but for the most part, from what I've seen, if they have even a medium credit score, the rates for MFA are pretty competitive. So it's definitely helpful for the borrower, but for whatever reason, there's that stigma out there that we're at the ABCD committee are trying to push to get rid of. So the new $25K grant I mentioned, as of the 30th of December, there was about $7 million in funds. And essentially, once those funds run out, that grant is no longer available. And the way it really works, they've been particular about saying you have to use the full $25,000. So that gives us a good estimation, with some simple fourth grade math. That's about 280 families left as of the 30th.
Wow.
Right. So when they say you have to use the full amount, and also this can be in conjunction with other down payment assistance that MFA provides as well. So if they're qualifying for Home Now, they're going to be getting that $7,000. If they qualify for first down, they're going to get that 4%. It's pretty cool. So it can actually go up to $35,000, and that's when MFA says, okay, we've given you too much money.
Yeah.
So yeah, definitely talk with your lenders about this. Those who participate with MFA, not everyone. I think not everyone's even set up to do it yet, because there's, depending on how they're disclosing it and all that. Much less MFA's asking the lender to provide that $25,000 up front, essentially, and then MFA will pay them back. But that's a whole nother thing. Your borrowers, your buyers, they don't have to care about that part. But yeah, so just keeping in mind that using the full $25,000 can actually lower their first loan amount. So if they're using conventional, FHA, et cetera, whatever, it's going to just lower their first loan, and then obviously make that monthly payment lower. If you're looking at other underserved areas of the community, so if you're looking at purchasing, or your folks are looking at purchasing, let's see if I can pull up the map, in any of these areas specifically, and you want to, again, do a little more digging and you want to be that subject matter expert more so than just say, hey, talk to a lender, you can go on MFA's website. They have the link to check out this map. And back to this slide, if you're looking at the map, that section where it says year 2022, I was told by MFA you need to go off the 2020 map to be able to even view these areas specifically, because that part of it's just not updated for whatever reason. So just a little tidbit there. If you're looking at that. So these are the underserved communities as dictated by the government, i.e. I think just New Mexico. MFA, by the way, if we haven't covered for those, is Mortgage Finance Authority, but it's just New Mexico's version, the state of New Mexico's version of down payment assistance. Just to kind of rehash on that. And there are income limits. So the $25,000 grant income limit I have here are essentially just the Home Now income limits. And Home Now is just a different version of more down payment assistance we mentioned. It's $7,000 right now. And again, it's like CDFI funds where once that money's gone, it's gone. So if it is gone and you're looking at the MFA website on their interest rates and stuff, and you don't see Home Now listed, that means the funds are gone. Then you're going off of First Home's, essentially their income limits there. First Home, first down, just to cover that. First Home is just, hey, here's your conventional loan, your FHA loan, and you're getting it with MFA. First down used to be $8,000. It was very easy to just like default say, yep, it's $8,000. It hasn't changed for God knows how long, but recently it is now 4%. So just keeping that in mind, if you're kind of an old school realtor out there and you're just thinking MFA, $8,000, it's no longer that. I don't know how long it'll stay 4%, but just keep in touch with your lenders and ask around as time goes by. But yeah, there's your income limits there for first down. And again, you don't have to be the person who's analyzing pay stubs and stuff, because MFA and lenders have their own versions of calculations for that, Fannie Mae and such. So yeah, here's the interest rates, again, posted as of the 30th of December. So if they've changed, check out MFA's website right there. There's your link. If there's no other questions about that, I'm going to jump into VA.
Yeah, no questions so far.
Cool. So real quick, veterans essentially are, at last I checked, around 1% of the population in general. So though being a veteran doesn't mean necessarily that you are underserved, but they go through the same statistics as those who are in those communities that are underserved. And actually, if I remember right, somebody out there can correct me if I'm wrong, there's a lot of Native folks that are vets as well, right? So that's another way you can help out those who have a CIB and perhaps for whatever reason, like Lauren said, it doesn't make sense for them to do the 184.
And a lot of undocumented people join of the forces.
Exactly. Yeah. Yeah. And segueing into that, you as realtors out there, you're probably most likely going to encounter somebody in the National Guard. I personally was on COVID orders with somebody who was in that exact situation where they were, they joined the Air Force just to like essentially be, I guess, is the process easier to become a citizen?
Yeah, depends on the situation, but essentially, yes. It depends.
Okay. Right, yeah. So people just doing stuff that's going to be good for their family.
Exactly, right.
Yeah. So that's why I wanted to put that bullet point of highlighting the Air National, or not the Air National Guard, but the Guard and the Reserves, is that if you see somebody who like doesn't look like they're in the military like me, like I got a beard right now, doesn't necessarily mean
Does not look
they're
like
not
his
in the
picture.
military in some capacity, right? So it's asking those questions, doing a little bit of digging, and
What question would you ask?
well, obviously for us and our loan application is like, have you ever served in the military? It's an easy ask for us because it's on a checklist. But if you're not looking at that, maybe just making it a part of your normal buyer consultation, right? Like making that, are you native? Do you have any type of affiliation with a tribe? And do you think you could possibly go that route, right? It's the same thing. It's just like asking, have you ever served in the military in any way, shape, or form? And then kind of referencing, going back to, say, go talk to a lender and get your certificate of eligibility. So COE, certificate of eligibility. We'll talk about that a lot. And that's essentially your gateway, the same way the CIB card works, to being able to qualify for a VA loan. It tells the lender precisely how much eligibility, like dollar amount, you have available. And for a traditionalist, a DSG, if you will, if anyone knows that acronym, someone, a weekend warrior, right? That just requires 6 years of service, bare minimum. Then if they've done any type of active duty orders, like I mentioned, COVID, that happened recently. The Afghan withdrawal, that was a whole big thing. Any type of firefighting stuff. If you are on some type of military orders, check it out with your lender, try and get your certificate of eligibility. And depending on the type of title designation, whether it was federal or state or what have you, you might have qualified for more active time, which is usually just 90 days. So the VA guarantees VA loans. That really is more so of a lender. We care about that because the other loan types just insure the loan. But again, it's not really a mind of the buyer or borrower. They don't really care much about that. VA loans are up to 100% LTV. LTV is loan to value. We don't necessarily always talk about down payment. We talk about loan to value. So if you've put 10% down, that's 90% loan to value. So essentially zero money down, aside from closing costs, usually is what they have to pay at that point for a veteran. Primary residence only. So going back to the housing hacking conversation, then you can get a 1 to 4 unit property. You can have as many people in theory as you want living there to pay you some rent to get that cash flow. But what we care about is intent. So primary home versus secondary home, i.e. vacation home, versus investment property. All those come with its own technicalities of that. And a primary residence just means you have to live in it for at least 12 months. Limitations on closing costs. So that just falls into seller credit. We didn't really touch on that much, but basically just ask your lender if the buyer, or rather the seller, can pay for the buyer's cost for XYZ thing. The newest loan limit there is posted. Sometime during COVID, it was actually unlimited. So in theory, a veteran can go and buy $1 million house with their eligibility if they qualified with the debt to income ratio. And then jumping right into the next bullet point, residual income calculation is kind of what the VA actually goes off of, as opposed to a standard debt to income ratio. The only reason I'd mention a debt to income ratio, DTI, is that your automated underwriting software and all that fun stuff will actually dictate approve eligible. It'll check a box. But if you don't get an approve eligible, like say if you have an engaged couple, like they're not technically married, in theory, I would not get an automated approval with that, but doesn't necessarily mean they don't qualify. So that goes back to if their debt to income might be a bit high, perhaps the residual income calculator, a whole separate thing that a lender would have to fill out a form for, does check that box, then they're still approved. Jumping into, more importantly, the loan transferring assumption, just again, like talk to your lender, but if you know somebody who already has a VA loan, maybe it's worth trying to refinance it to reduce their interest rate. Probably not right now, but
Rob, can I ask you a question about assumptions? Because I feel like we've seen a lot of these come up lately because rates are so high, or at least in comparison to some clients that maybe have a 2.25% interest rate on their existing mortgage, and then, you know, you have a client that's a veteran who wants to assume another veteran's mortgage, what would be your first step for them? What would, like, where would they do? Because I haven't seen very many assumptions in my career.
Yeah, great question. I would say certificate of eligibility. Like always, first step, get that COE to know how much you qualify for. I know it's definitely come up too. Do you have to be a veteran to be able to assume another veteran's loan? In theory, technically, no, you don't. But it is rare. And at a certain point, it's on the servicer. So the person who currently has the loan and that borrower, that veteran is making the payments to, that servicer, that lender is going to need to recoup essentially those VA entitlements. Much less, like, so if I am a veteran trying to like sell my home to somebody who's not a veteran, I'm still looking at my entitlements being shrunk by significantly. So, and we'll kind of jump into that too. You can have two VA loans, right? So that would be that situations where I still have this VA loan, my entitlements are still tied up to this house, I'm trying to buy another house, but let someone else assume or transfer this loan, right? That's what that entails. But to go back to answering your question directly, just get that COE, and then you can kind of go through the process, and you'll probably have to talk a lot with the servicer, you know, on the assumption process of that.
Thanks, Rob.
Yeah. So we're going to talk about funding fees, and then I believe we go back into, okay, so we'll do that real quick. So funding fee, this kind of plays into those who might be in an underserved community, i.e. Disabled in some way, shape, or form. And when I'm talking about disabilities, I'm talking about like what the VA considers is a disability. And usually it's service connected. So you see, here's your list of those who are exempt from a VA funding fee, and all the funding fee really is just a certain percentage tacked on top of the loan. So easy numbers, if your loan is a $100,000 loan and you're essentially doing the full funding fee, it's, I didn't put the chart in here, but it's like a 3-ish%, right? In between 2 and 3%, depending on how much down payment you're putting and all that fun stuff. But it's just going to be, 100,000 or 102,000, et cetera, right? Like that's what a funding fee is and does. It just tacks it onto the top of the loan. But obviously, like, people care about that. And so if you're really trying to squeeze that juice, then you're going to try to find your best way to lower that amount. So aside from which loan type, whether it be a refinance, I already mentioned down payment. If you're putting down payment with a VA loan, it can reduce your funding fee if you don't have any VA disability. But outside of this list, those are, you're not exempt, essentially, from 100%.
So
it's gone.
Rob, just, you were talking about, is there a disability percentage that's needed to receive the benefit?
That's a great question, and I believe it's not on here. But pretty much if you're 100% VA disabled, then it's, you're getting your VA funding fee waived, much less on this slide in particular. Your taxes, your property taxes would be completely waived. Mm-hmm. But if you have any other number less than that percentage, then no, I don't think your VA funding fee is going to be waived.
I also, if I may say, I have had clients who have had disability through the VA, but it's not the same as we consider disability for Social Security purposes. So just because, I guess my suggestion would be to not make the assumption that just because they have a full-time job and are VA, they don't have any disability.
Precisely. Yeah.
Right, yeah.
Yeah, because it's very different the way that it's evaluated.
Yeah, and kind of going back to like putting this question in your checklist of things to ask, that's a touchy one and hard to get, because like some people, much like if they were undocumented or something and they don't feel comfortable like divulging certain information for obvious reasons, like disability is one of those where like, oh, well, I'm a fully functioning adult, like I can do things, I'm not disabled, like that thing, but it's just really, it's a number on a paper when it comes to the VA. So that's something to try and like perhaps remind your clients, like, hey, it's kind of like if you were in the military and you feel like you did your time, you got what you got out of them, that this is a little more juice you can squeeze out of the federal government, essentially, is getting disability.
Is that going to show up on the COE? I mean, is that what that certificate does is tell the lender where
Mhm.
they're at.
Yeah, and actually, it does. So if they get some type of income, right, like
Mhm.
a regular monthly check, the disability will show up on the COE.
Mm-hmm.
So, somebody has their hand raised in the chat in e-sellers, I think. I don't know who it is.
Do we want to let them speak their piece? Are they going to verbalize their question?
So there's several comments in here. Let's see. So
One about origination fees that we
yeah, so
Mm.
our origination fees, I know which one that kind of went further back up here. There was a couple questions, and there's one that goes back to the 184 as well. Is there,
says, I heard they can get help with origination fees.
yeah, that they can get help with the origination fees?
Yeah, so the origination fee kind of falls under this slide with the limitation on closing costs and fees that a vet pays. Some lenders might just give them a break. I think, if I remember right, Guild Mortgage has a thing. Newsend in particular, they don't. $9.95 is your typical loan cost for underwriting and doc prep and stuff. We waive that for vets, for VAs. So that's sort of a lender-specific thing, but again, it's like a 1% rule is maybe what some realtors might have heard out there as far as the limitations on what a veteran can pay. But yeah, that is something that is like lender-specific on.
And we've had a
waiving the
couple of
origination fee.
comments. So Diana and Katie said just 10% rating for disability, and the fee can be waived. Is that correct?
That might be something that the veteran might need to go to the VA directly on.
Mm-hmm.
So one of the resources too I have on here is how you can get your own COE, and that's something I would like, kind of what Lauren asked. Like, I would recommend the vet to do is just go get your own, figure it out, and then if that's something that they're really shooting for, if they care about getting that funding fee waived, talk to the VA because it's going to show up on the COE. Like a great example is like I had a friend who he's very new to the Air National Guard, and he hadn't quite met his even 90 days of active service on active duty orders.
Mm-hmm.
But he was going back and forth with the VA constantly, finally got his COE. So that's something that you can do is just like submit some extra documentation to be able to waive the funding fee. And that's something that the lender wouldn't be involved with. It's just what happens on the COE.
Okay. Yeah, so that brings the point about, questions that we ask to our clients and how we want to also be careful what we say they could or could not be eligible for. And so in this case, it sounds like, a lot of what their loan availability is based on that COE, right? And so, we want to kind of guide them towards that, say like, hey, go back to the VA, make sure that we can get that in place. Much like as we talk to clients about getting that pre-approval or pre-qual letter, before, those are the steps that we're preparing them for as we go through this process, right?
Yeah.
And then that hand was up, but it's down now. You might ask if there's still a question.
So if there's any other questions for Rob, while that's coming up, so if there's any other questions about VA loans or MFA, so there goes back to the one about the 184. Can that be worked in conjunction just the same as I asked Maria Jose with MFA?
Yes.
Yes, yes, that question is
So
yes.
MFA
Answer.
MFA will combine with VA, USDA, FHA conventional.
Yeah.
Okay. Yeah, we've had some excellent questions come up in chat. Thank you, everybody, for putting these questions out there. I think James had some great questions too. Come to the meetings. We have some great resources on some of those questions that you're asking. But as I don't see any other ones for the VA. Okay. Question, can you explain what the COE is?
Yeah, so the COE is your certificate of eligibility. That is your ticket to saying that you are entitled to VA benefits for a VA loan as a veteran.
You'll notice all of these products have some type of identifier for whether it's your green card, whether it's your CIB, whether it's your COE. All of those require the buyer to at least be able to prove enrollment in some type. And documentation is required. I will say documentation of that is the hardest part of the job, because we can't move forward without that and having accurate documentation. Like Maria was saying, sometimes it's expired, and sometimes we're trying to track down trailing documentation, or sometimes the COE is inaccurate. Maybe they sold their house, but it's still reporting. So, just encouraging your client that have you served in the military, right? Are you a member of a federally recognized tribe? Do you receive a VA benefit monthly? All of those kind of provoking questions will kind of lead into that. Okay, let's go ahead and start here. Let's start with obtaining your certificate of eligibility. Have you talked to the VA? Have you obtained your CIB? So I think that's really important, just to move forward and know that it does take some upfront work to do that.
And a little piggyback off of that too, keeping in mind that a lot of times in our digital world, automated systems are a thing. Like you just mentioned, your COE, certificate of eligibility, could be inaccurate in the sense that maybe you already have a VA loan and you just sold that property or something, and it's not pinging. Us as lenders, we can actually, as long as we have the right data, like what service you're in, for how long, your social, date of birth, all that stuff that usually comes up on a loan application anyways, we can get a COE for you. But again, that's just through an automated online system. So much like my friend's situation I explained earlier, it could take a little bit more legwork for that vet to ping the VA to say like, hey, I have some more stuff I need you to update my COE for.
Yeah, so we've both been, so these are the questions that were coming up that we're asking. On this one, no, not here on this one. So, the points about getting the letters, the certificates, the all these ones that you were just saying, Lauren, it's important. It's important that we have the right information going to you as well, because that way you can provide what that best product is and how to help, that client, correct? So, I want to go back to what, and kind of bring it together. James had asked about, are there programs in New Mexico that, assist with housing in these underserved, communities. And I want to go back to what Maria Jose said about, culture. So culture can be very different in the sense of what we may have learned. Culture isn't just about how you identify in race, perhaps. Culture can be a military culture. Right. It could be a familial culture. Native American tribes, each tribe has their own culture going in. And so we want to be careful about not assuming, and we want to ask those questions, because we're in the business of, really building relationships, and not just, pushing numbers and products out. We're all people. We're people looking to build lives and goals and generational wealth.
And just to touch on that as well, like building that trust and culture, it will get you farther away on your career even than trying to force a relationship with a client. I mean, just from personal experience, I have had clients that have come to me after they were working with a different realtor and a different lender, that they were using a translator, or that they were using someone that they were hiring to translate over the phone, and then the transaction fell through because something was lost in translation. I had this lady who was going to close 2 weeks, and then it had to be terminated because she said that she had $60,000 in checking account, and she meant cash, not checking account. So she went ahead and deposited the money, and then the transaction fell through.
Yeah, gosh. Yeah, I'm working with a client that is a similar situation. Happen. I'm like, oh, was that me?
Yeah, and sometimes especially with first-time homeowners, I like to meet with them in person as well, because I was a first-time homeowner before I even got into this business, and I didn't have any of the knowledge that I have now. Right? It's a lot to digest.
Yeah. Lot to digest. That is so very true, so work together as a team, work with, the lenders that you're comfortable with, ask the questions, again, going to what Lauren said, not all lenders are certified, right? Or that are able to provide all of these loan products. So, really use your resources and say, okay, this lender may not be able to do it. Let's go. And I know that, we always say like, don't have your lenders go shop to shop to shop, because it affects our credit scores. But we talked about this. We want to talk about what their requirements are, and if it fits for that client before we go and have them run all these credit checks. Is that, and then correct me if I'm wrong, we just want to make sure that we're fitting them with the correct lender.
I feel like you just said something that if no one takes away anything, it's this, because part of what has disparate impact on a buyer is them thinking, I can't go seek out a better product for me because it's going to impact my credit score. Mm-hmm. The CFPB regulates this, right? And anyone who says otherwise, you're on my list, because I really hate this, because I understand not wanting to shop your product, but you have to remember that not everybody has the product the buyer needs. Mm-hmm. And there's been oftentimes, all of us we have lender friends in every single company, because I know what Maria does. Last week, I'm like, I need your card because I have, a client that would totally fit this need. The buyer has 45 days per the CFPB, right? From the day of their first credit pull to shop their lender. They will get multiple trade lines. However, they're not going to see multiple reductions in credit score. Mm-hmm. That is really important to educate your client on, because it is not acceptable for your client to stay with a product that is not favorable to them for fear that they will be penalized, mm-hmm. especially for clients that already struggle with financial literacy and don't have access to credit requirements or even knowing the base terms of what a credit score is or what it's compiled of. And so if you take away nothing else, know that information and tell your client. Part of me asking these questions is so that way I can get you to the right person, mm-hmm. to the right product, to the right company. And maybe it's not even with me as the realtor. I have mm-hmm. a client right now who, very similar to what we were just talking about, you guys probably saw it on the GAR website because I've been searching forever. But I need a realtor that speaks American Sign Language. Mm-hmm. That's very tough. Mm-hmm. That's a tough fit. But you know who referred that client to me? A non-ASL speaking realtor who knew. They said, Lauren, this client, I'm not going to be able to assist them. We need to find them someone who can help them comprehend what they're signing, what they're going into. And so, that's what I think is so beautiful about this, is mm-hmm. that's really what we're pinpointing, is just trying to make it accessible and putting clients in the right places at the right time with the right people, with the right products and the right information. So thank you for saying that, Helen. You get 5 stars.
Lauren just mic dropped on us.
So but you get 5 stars, Helen.
I get 5 really stars, important. Everyone. Thank you. So, Maria or Rob, do you guys have any closing kind of like mic drop? I don't know. That was a big mic drop.
The only thing I would add to that is just making sure it's mortgage specific inquiries, because yes. that's what Lauren's talking about. Whereas like if the client goes to try and apply for a credit card, a car loan, et cetera, right? That's no bueno. Yeah.
And we were talking another day about how we had the guest speaker, and she was saying that when someone is denied for a mortgage, they're more likely to acquire auto loans or credit cards because they feel like they're having to fill that void. And I always try to have the conversation. I like to do group text between the client and the realtor, mm-hmm. and encourage the client like, hey, this is the fact that you don't qualify right now. Doesn't mean that you're not going to qualify in 3 months from now. Mm-hmm. Let's work on a plan.
Stay the course.
Yep. Yeah, so that you can qualify in the future. Because it is tough. We don't want people to get discouraged.
Mm-hmm. Gosh, that is excellent. I go back to that Native American Housing Justice Summit that I went to, and that's exactly what they said. The miseducation of what that means. They think that a home process is they go, they see a home, they put an offer in, and boom, it's done, because they work, they make enough money, they have money in their couch. Let's go get this home. but there's these steps and these processes and regulations that you all have to follow in order for those loans to be approved. And so that's part of that education. And you're right, you know, they get discouraged when they hear, okay, we have to, you know, put the money in the bank so that there's a, you know, a record of this. We have to make sure that we follow these guidelines. So it's not going to happen in 45 days, but it could happen in 3 days, you know, 3 months, 3 days, 3 months. But that's where that encouragement is needed, right? To stay that course. So,
and you as the realtor, don't lose hope either.
Exactly.
Right? I'm telling you, you're going to create better and stronger relationships, sort of working with that client no matter how long it takes them to achieve their goal, than just giving up.
Absolutely. So a few more questions. Medical collections, are they going to impact the ability to get an FHA, VA, or MFA loan?
Well, at the moment, if I'm not mistaken, medical doesn't count towards the $2,000 limit that Lauren said earlier. It's specific to FHA at least, but I guess things are changing, right?
Medical collections, I think it's like happening now, and I'll have to check because this is a don't quote me, but
don't quote Lauren.
Yeah, don't quote me. All 3 credit bureaus before, you know, even though on the lending side we would exclude medical collections in terms of qualifying, but it still hurts your credit.
Yep.
And which is awful because I mean we've had clients that have had terminal children, and you know, parents that are struggling, and you know, there's so much that goes on. And so you know, actively I think that medical collections are no longer going to impact your credit score if they're under $500, which is huge, because I will tell you, half the time my clients are like, what medical collection? What are you talking about? I didn't even know that existed. And they're for $40 and $30. And so we'll get more information on that. But so far, in terms of qualifying, we omit if it's less than $2,000 on those.
And so the update you're talking about, is that the mortgage, the federal, the Fannie Mae, et cetera, like updating their credit modeling system? Is that what you're talking about?
This is the actual credit bureaus.
Or the okay, because
Yeah.
I heard something in the regards of our antiquated mortgage credit pulls are getting updated in and of themselves, but that
awesome.
is like, I don't know when. I've just told, like, it was like a rumor in the mortgage.
I feel like everything's a rumor. Everything's a rumor in
until
mortgage.
it's on paper.
I know.
Yeah, until it's real.
Until we
And
get
then
the
it's gone
clear
30
to
seconds
close.
later.
Until we get the clear to close.
Yeah.
So several, you know, of our guests out there have asked for your contact information. So yes, everybody, all of the lenders that are our panelists today, the contact information will be available in the slideshow that Gar will post later on. So it'll have the contact information, the company that they're with. As far as a list of New Mexico lenders that speak multiple, that is an excellent question for resource, and that's something that I think that we can put in our goal list for ABCD. We will reach out. I think I may have, I'm volunteering myself this, but I will work with other people in the committee and try to reach out to lenders and see if we can get a list from each of the companies. I'm pretty sure that, you know, the 3 panels here will provide that. You know, I've talked to Rob about different, you know, lenders with different language, you know, abilities as well. So we'll search for that information. We will work on that as part of the ABCD committee. Let's see here. I think we've answered all of the questions. If we missed anything, you know, again, feel free to reach out to any of these lenders here. Reach out to your lender, ask the questions. You know, we've had as realtors, we've had an extraordinary 2.5 years, lenders as well, right? And so now is the time to really, you know, get back to like the nitty gritty of you know, being a realtor and being a lender. We want to reach out to those clients that have had the trouble of, you know, not winning their offer bid, you know, and be creative now, and, you know, reach out to the ones that may be in a position to be able to utilize these programs. Reach out to your SOI. You know, we have a great opportunity here to do really good things this year in the real. So as far as joining, Charlotte, I'm looking over there because Charlotte's whispering things over here. So, you know, joining the ABCD, reach out to either, again, Adrian Reyes. He's down here at GAR. And I just want to thank Gabe is in the background. You know, thank you so much, Gabe, for running this. He's the one that's making us sound good and everything. We just look good on our own. But, you know, the GAR staff is down here. They're working hard. You know, I've heard construction going on the north end of the building. So that should be exciting for this year, too. You know, and they're still fully functional. Come down to GAR. There's an awesome espresso machine here. You know, so coffee is still available. The staff is fully functional here. But, you know, reach out to Charlotte Parsons. You know, she's with Keller Williams, you know, for joining the membership of ABCD. Call us, you know, come to a meeting, see what we're about. We'd love to be able to, you know, share the information that we have, the resources that, you know, are available to us as realtors and as affiliates. This is open to the entire membership, you know, so not just the realtors, but, you know, talk to your affiliates, have them come too. You know, our goal again is for fair housing and for, you know, advocacy of home ownership. So again, I want to thank you for joining us today. Right, yeah, the affiliate, you know, lenders are part of, we have all three of these lenders are part of our committee here. And so again, Rob Hill, thank you so much. Lauren Sandoval, thank you so much. Maria Jose Ramos, thank you so much today for joining us. And have a great year.
I got the links too, the resources.
Rob has the links and resources.
Once Gabe gets us there. All right, cool. So here's the VA stuff. Just kind of going down the list. If you do have your disability, your VA disability, or if you don't, either way, if you don't, like me, like I don't have a single disability right now for VA, you do get reduced property taxes. Just go to that link there. Those who may not know, but if you're over a certain age and under a certain income, you could actually have Bernalillo County freeze your taxes. There's that link there. VA patient advocates. So if you're trying to get some VA disability, so perhaps you got some headaches or like you're getting ringing in your ears, just go to those links down there. And the very bottom one is actually a networking resource for veterans. So like if you're trying to start your own business, starting with the Small Business Association, SBA, and all that stuff, there's folks there in that link at nmvba.org to help you out. To be able to utilize not just your veteran preference when it comes to military contracts or whatever government contracts, but if you're a women-owned business or for a minority-owned business, all that, those people can also still help you. Resources for the underserved communities we talked about. These aren't part of my slide. We're going to leave this one up here for a minute, and any one of us can talk to which ones these are. I don't know. I think this was an Adrian thing who put all those. Or any of those familiar?
Can see.
Can you guys hear me?
Yes.
Okay, so yeah, I did throw this slide in there. Wanted to just kind of give out some resources, two resources, to be honest. So there are plenty of community leaders that we invited into this presentation. Some of them did show up. And so that's what this was for, was people that are out there that are already kind of working in these communities with these underserved folks, and just trying to create those bridges between GAR, ABCD, and those that are already out there doing the work. Within all of these places that I listed on here, they do have a ton of resources. So everything from Lutheran Family Services all the way down to all faiths. They have, interpreters, they have therapists, they have all different types of people that are available to these communities. So I just wanted to throw that out there so that people have, at least that resource to contact somebody and get the answers to the questions they may have.
Thank you, Adrian. So, and I know I keep saying like one last thing. I mean, I don't know if this is like a talk thing, but I just want to thank the audience members for joining us today. We have, amazing questions that came up. We have, there's veterans out there that have been helping supplement with, some of the questions that we've had. So thank you so much. These programs, they're not going to be easy, easy transactions. It's going to be a challenge. This is where we're going to really challenge ourselves as realtors and how we're going to, kind of stand out as being, knowledged professionals. So, stay the course. We can do this. We can, get more people into more houses and form these relationships that last longer beyond the transaction. So thank you.
There's a lot of opportunity in 2023.
Lots of opportunity. Gosh, that's another mic drop, Lauren. Thank you.
Or if you're just trying to be a steward of your community.
Ooh,
right?
gosh,
join the
drop.
ABCD community committee.
Thank you.
And thank you, Helen, for being our moderator today.